Welcome to The Explainer. Today, we're going to dig into the powerful forces that are shaping the future of gold. Is it heading for a boom, or is a bust just around the corner? So, after a year where gold seemed to break a new record almost every other week, the big question on every single investor's mind is, what's next? I mean, the price surged by more than 60%. And to give you some perspective on that, it was one of its best years ever since the United States went off the gold standard way back in 1971. Just incredible. So, does that mean we've hit the peak? Is the party over? Or is this just the beginning of an even bigger move? Let's unpack the bull case first, the argument that this rally has a lot more room to run.
It turns out there are three really powerful narratives fueling this idea that gold's rally is, well, far from over. It's really like a perfect storm, right? You have countries hedging against fiat currencies, central banks are diversifying away from the US dollar, and this constant backdrop of global conflict is just driving demand for a safe place to park money. And look, this isn't just some theory. The data here shows a major global shift is underway. Central banks, especially in places like China and across the BRICS nations, they're buying up physical gold at a historic pace, really as a hedge against the US dollar system. Now, a key risk here, or opportunity, depending on how you look at it, is the incredible speed at which physical gold is being bought. It's literally draining the warehouses in London and New York. And this could trigger what's called a short squeeze, or 비탕항칭, where there just isn't enough physical gold to cover all the paper claims. If that happens, prices could absolutely skyrocket. This intense pressure on the physical supply really highlights the uncertainty we're all facing. The future isn't some straight line. It's more like a fork in the road with three very, very different paths gold could take from here. The World Gold Council has actually laid out these three core scenarios for 2026. They range from, a mild slowdown to a deep global recession, all the way to a surprise economic boom. Okay, so first you've got the shallow slide. Think of it as a mild slowdown. In that world, gold sees a modest price increase. But then there's the doom loop. This is the scary one. A deep recession, maybe kicked off by escalating global conflict. If that happens, prices could soar another 15 to 30%. But on the flip side, if the global economy roars back to life in what they call a reinflation redux, well, gold could actually see a pretty significant pullback. And that doom loop scenario? That's exactly why some analysts believe that if the most bullish conditions play out, a price target of $5,000 an ounce is well within reach for 2026. Hey, if you're finding this useful, please take a quick second to like, share, and subscribe. That way you won't miss any of our updates. Okay, now let's look at the other side of this coin. Because look, this rally is far from guaranteed. There are powerful counter-narratives out there, competing stories about the future, really, that could stop this gold train right in its tracks. It really boils down to a battle of stories. You have the bull story, which is built on instability, a weaker dollar, and a hard landing, versus the bear case, which is all about a return to stability, a huge productivity boom, and a successful economic soft landing. So what could actually cause that kind of reversal? Well, first, a true AI productivity revolution could totally supercharge the US economy and the dollar, which would make gold a lot less attractive. Second, a perfect economic soft landing, where the Fed beats inflation without triggering a recession, that could restore a lot of faith in fiat currencies. And finally, and this is a big one, any significant de-escalation of global conflicts would naturally just dry up the demand for a safe haven asset like gold. And this all brings us to our key takeaway. Gold's future for the next few years really depends entirely on which of these competing global realities actually wins out. When you look back, the 2025 rally was driven by this really rare, balanced mix of forces. You had geopolitical risk, interest rates, pure price momentum, and economic growth, all playing a pretty significant role. It wasn't just one thing. At the end of the day, gold acts like a global barometer for risk and for confidence. Its price tells a story about how we all collectively feel about the future. So that leaves us with one final thought. As these powerful stories about our global future, one of instability versus one of recovery, continue to battle it out, which one do you think will ultimately win and define the next chapter for gold?